Hey guys, so we're going to be discussing about the fake outs you face in the market. So sometimes when you come to the market and you are following your trend lines, something like this tends to happen more often, right? And you might be wondering, why is this happening to you? Why is it that every single time you actually follow the market and you trade based on the trend break system and you still end up getting stopped out? This is what we call the fake out, right? So one of the main reasons why this thing happens is because the liquidity up here is being hunted. And as I'm looking at this market right now, I still think this liquidity is still being hunted a bit. I don't believe that this hunt is over, right? And this is the reason why most times you end up getting faked out. It doesn't mean that your trading system does not work. It's just simply that you are entering too early. And I'm going to share with you what you need to start doing or what you should put into consideration in order to avoid early entries like this so that you won't be making losses. So initially, we'll talk about how to trade and how to do something like crypto arbitrage and make one through the financial market, right? So if a person is actually interested in things like this, kindly go ahead and subscribe to the channel and give the video a thumbs up. So let's go ahead and see how this is actually going to work in an actual market. So this currently EUR/USD. You can use any trading pair or asset you want to trade this same strategy. It's still your normal trend line trading strategy. That's the break system and moving to the other direction trading system. Okay, so it's something you always known and it's not a new thing. In case you don't really know about this strategy, then when a market is doing higher highs and higher lows, we call that an uptrend. So whenever the market breaks that trend and start going to the other direction, we call that trend break, right? So some people call that structure break or whatever, right? But basically, most people tend to take the trade to the other direction at that time. But the problem, just like I showed you guys earlier on right now, is that if we go ahead and put our trend line, let's go ahead and use this. Sorry about this. Okay, so let's go ahead and use this and show you how this is gonna look like. Okay, so if we go ahead and put our trend lines on, let's say something like here, and then choose the other position over here, then you're quickly going to figure out that this particular trade is not going to be profitable for most people, right? And why is this not going to be profitable for most people? This is because this particular trend right now has not completely been broken. This is actually a fake out. If you look at this profile, okay, so it's actually a fake out trend that's happening here. All right, so this is the proper way it's gonna look like. Okay, so here's what most people are gonna do. So once this market has come over here, it moves from here, higher high and higher lows, and it gives you what's the first test. Then you mark it and extend, right, to use the array trend line in order to extend it indefinitely. Okay, and then it goes up again and then it tests back again, right? This is the third time. Most people are gonna go up, right? But then some people are gonna wait to see if this is gonna break the structure. And you can see over here, it did act as if it's gonna break the structure because it actually did come under this trend line. Now, most people are gonna make the mistake of going over here and taking a short position right here, and then maybe put their stop loss just above the previous high, which is over here, and then maybe their take profit is gonna be from where the push started, somewhere here. Now, this is actually a very nice trading strategy or pattern or idea, right? But you can see over here, we quickly had a stop loss hit, right? So like I said earlier on, it doesn't mean that the strategy is faulty, but what is happening is that you are neglecting a very crucial part of this whole thing, and that is the retest, right? Like I told you earlier on, there's something called stop loss hunting. The big markets tend to hunt stop losses a lot. So let me show you guys something. In order to avoid this whole kind of a thing, let's say you have your trend line over here and you put your market over here, right? So this is a downtrend, and then something happened and the market comes over here, but it couldn't test here, and then you take another one over here and then you put it just over here, and you can see clearly right here, this one finally entered and it broke the structure. Now when it breaks this structure, you don't take a long position immediately. What you have to do is you have to wait for the market to retest, and you can see clearly that there is a retest right here. The market actually did come here to retest. So on this retest, let's say you finally found the retest over, because you're gonna have to let the market retest and show you that it has an intention of continuing to go up, which by that intention, this candle pattern over here, this bullish candle pattern, is a very clear intention, right? And then you go ahead and take your trade over here, put your stop loss just way below maybe way below the trend line or way below the uh the bullish candle, right? And then over here you can target maybe 4:1, 3:1, depending on your trading pattern. Now some people can go ahead and target over here, targeting this particular highs, right? And I can see over here that they weren't wrong either, because when the market came over here, it did react. And the reason why I say this particular high, because there is actually a point of interest over here. There's actually a liquidity, which not so strong liquidity to put, but there's actually a market over here to be taken out, right? So you can see the market did react. People went to sell because of this, and the market did react but continued going up. Regardless, you're not really interested in that. All you're interested in is that you've easily made 3.64% or times your money already from this particular movement over here. So it becomes really easy when you understand this whole thing. So the reason I actually use this to show you this particular strategy is because this whole trend, you don't have to mark a single trend in the market. So let me show you guys another one. So you remember this very first trend we marked, right? So let's forget about this one. Let me go ahead and delete this. Okay, so let's say we neglected this smaller trend and we just use this one over here. Now if you look clearly, you're gonna see over here that the market actually did come and break the trend, right? So when it did break this trend, what happened? It came back to retest. It didn't come back completely to touch the line, but it did show interest in retesting. So when it starts pushing up, you can, probably enter your trade somewhere here and put your stop loss somewhere here, and maybe 2:1 or 3:1, easy peasy, right? So you'll be able to capture that particular trade as well. Now sometimes I won't blame you if you actually miss out on this trade, and the reason for that is because I mean, most times we like to let the market actually come very close to the trend line, so we can be able to take as much small stop loss as possible. So if you miss out on the trade, don't be in a rush. You cash the next one. Okay, so that's just something I want to let you know. Okay, so using this same thing right now that we've actually seen over here, you also have to do the same thing over here. Okay, so just go ahead and pick out a trend line and mark out the points of intersection. You can see these 2 points has been marked out right now. Now the market did come and faked out. It didn't actually start going bearish, and I'm sure it has already closed out some people, right? So right now, even if it comes over here and breaks, we are not gonna go sell. We have to wait for the market to retest. So when it comes back to retest, here is something you can use to maybe just hold this line. Okay, so you can just come over here and mark this line just in case, right? So after it goes down and then it comes back to retest, then you go short. But sometimes it might not really have to get to this level. You just have to be, watch the market, maybe set your alarm somewhere here, so you'll be able to understand what the market is doing at any given time. Now if it goes ahead and forms another low right here, all you have to do is to simply take your trend line again and drag it all the way there. For example, let's say this happens to be another low, so go ahead and take this over here and put it over here. But right now it's not crucial to do that because the market has not given itself the space to actually take that trade. Okay, so basically what you have to do right now, just let this market run. We don't have to enter the market right now, so just let it run and see what is going to happen. Is it going to continue coming up to close out a lot of stop losses over here, which I think it is likely going to do, right? And is it going to just go down over here, giving you a lower low, because this is already a low? This all comes over here, lower low, retest, you go short. As simple as that. Okay, so this is actually the strategy I wanted to share with you. What do you think about it? And hope you actually learned something new in this video. I'll see you in the next one.